All right. Well, today I wanted to take you through how to analyze a balance sheet. A balance sheet basically shows the financial health of a company. Out of all the three financial statements, in my opinion, the balance sheet is the first one I look at, and I think it's the most important. So today we're going to look at Meta Platforms, formerly known as Facebook. So on Yahoo Finance, you can come up to the search box, and you're just going to type in the symbol. And then you're going to come down here to financials. And then once you're on this page, you're going to scroll down to where it says balance sheet. So on the balance sheet, you can see that there's an annual balance sheet, and then there's also a quarterly balance sheet. So for today, we're going to stick with the annual balance sheet. So the first thing we're going to want to look at today is where it says all numbers in thousands. This used to be pretty confusing to me, honestly, when I was first learning about balance sheets. So you see total assets for Meta of 185 million. You just need to remember that you need to multiply this by 1,000. So the total assets of Meta are actually 185 billion. So with total assets, this is basically everything that Meta Platforms owns as a whole. So with total assets, the key thing you want to look at is you want to see the total assets growing over time. So as an example, year-end 2019, Meta had total assets of about 133 billion, 159 billion at the end of 2020, 165 billion at the end of 2021, and then 185 billion at the end of 2022. So this is showing that Meta Platforms assets are growing, in a very healthy way. This is a good sign of a growing company. So we're going to come down to the next line, which is current assets. Meta, as you can see, has current assets of 59.5 billion. Current assets are any assets that will be converted to cash within the next year. Current assets are very important because, this is how a company shows its liquidity and the ability to pay any obligations that it has in the short term. Some examples of current assets are cash and cash equivalents. This could be bank accounts, treasury bills, money market funds. The next line is other short-term investments. These can be shorter-term bonds. These can be CDs. The next line is accounts receivable. Accounts receivable is basically amounts that are due from customers for services that were delivered by Meta. The next line down is prepaid assets. So prepaid assets are basically, any expenses that a company has made in advance to pay for goods and services. So the next thing I wanted to discuss when it comes to balance sheets is what's called the current ratio. The current ratio, it's an important financial ratio because it represents a company's ability to meet its short-term obligations. The current ratio is calculated by dividing the current assets, which in this case are 59.5 billion, by Meta's current liabilities, which are approximately 27 billion. So I came over here and I plugged this in the calculator, and I got a number of 2.2. Which basically means that, the current assets are approximately 2.2 times the size of its current liabilities. And basically this signifies that, this is a very healthy balance sheet, essentially. Ideally, you want a current ratio of above 1, but if you have a current ratio of 2 or 3, this is really good because basically what this means is that the company will be able to, pay its short-term debt obligations a lot easier than if the current ratio was below 1. The next line we're going to look at is total non-current assets. I always hate when it shows that because really what it should say is just total long-term assets, just to make it easier. But the next line is net PPE. What PPE stands for is plant, property, and equipment. So as you can see, Meta has about 92 billion in plant, property, and equipment. A lot of these terms are pretty self-explanatory. Properties, land and improvements, about 1.8 billion. Buildings and improvements, 27.7 billion. That could be, let's just say, Meta has a lot of offices where the workers come in to work, and basically they're trying to, Zuck might try to make it a more fun work environment. So, he may design, different breakout rooms, fun conference rooms, napping rooms, ping pong tables. Maybe he'll put a slide or a jiu-jitsu mat in the middle of the office, as I know Zuck's, preparing for a fight with Mr. Elon Musk. Machinery, furniture, equipment, that's pretty standard. Other properties that Meta has. Construction that's in progress. Any leases that, Meta's involved with. Accumulated depreciation. The easiest way to think about this is, let's just say you buy a car and you drive it off the lot. Typically that car depreciates about 10% every time you drive the new vehicle off of the lot, and then every year after, your car is going to depreciate by a certain amount each year. So this is the easiest way to look at it without going too far into depth. The next line is goodwill and other intangible assets. So goodwill is an interesting one. If you've listened to any of Warren Buffett's talks, he hates goodwill. Goodwill really happens when there's a merger or an acquisition. So let's just say, Meta decided to buy PayPal as an example. Maybe Meta wanted to, use its, processing platform. And so they buy Meta. So Meta buys PayPal above its net asset value and basically acquire that company. That would be an example of, when they buy a company above its net asset value, that amount would be added to the goodwill on a balance sheet. Other not intangible assets, whenever you see intangible, really just think of, non-physical. So, the opposite of land, buildings, machinery, furniture. So other intangible assets basically can be copyrights that Meta owns, patents, trademarks, like I said, those types of non-physical assets. The next line we're going to look at is total liabilities. So basically with total liabilities, one thing to really keep in mind when you analyze a balance sheet is you always want to be comparing the total assets to the total liabilities to kind of determine the strength of a company. So obviously with Meta, you see that their total assets have been rising year to year. One thing that you don't want to see is you do not want to see total liabilities rising, which, total liabilities have been rising for Meta because, Meta has been putting a lot of effort into new services like the metaverse, VR, threads, different services and products that they're looking to put out into the world. But you don't want to see the total liabilities raising and the total assets going down, because this is very not very advantageous to the health of a company. So basically current liabilities, these are debts that need to be repaid in the next year. When you think about total liabilities, this is basically everything that Meta owes. So in terms of current liabilities, these could be payments for services Meta received, legal advice from attorneys, short-term bonds that are payable, or like short-term lease obligations. The next line is accounts payable. So this is anything Meta needs to pay in the next year. Total tax payable, any taxes that Meta expects to pay within 12 months. Next line is due to related parties. Basically what this means is any liabilities or debt owed by a related party to Meta or any of its subsidiary companies. Current accrued expenses, basically these are expenses that Meta has incurred but just hasn't paid yet. So as an example, Meta might receive a service but hasn't paid them in full for that service. Next line is pension and other post-retirement. So essentially what this means is, when employees of Meta retire, Meta needs to pay out pension plans to those employees that have retired from the company. And they also need to pay out other benefits such as healthcare. Come down here to current debt. Basically, this is all the borrowing that Meta is doing that must be paid off within a year's time. Come down to current capital lease obligations. So what this is that's just an example. Meta may lease some of its buildings from an outside real estate company, and it must pay a certain amount in rent and utilities each month or by the end of the year. The last line that we're going to look at is current deferred revenue. And what that is revenue that's been received but has not yet earned. So the payment received is for goods or services that will be delivered at some point in the future. The next line we're going to look at is total non-current liabilities, which basically means total long-term liabilities. So basically these are debts that will be paid over a long time period, a period of longer than 1 year. Now this could include, mortgage loans, bonds that are payable, like long-term bonds, long-term lease obligations, and any other long-term business loans that Meta takes out. So for long-term debt, basically this is any debt or obligations that Meta needs to pay back in the future that are longer than 1 year. Long-term capital lease obligations, basically the amount that Meta will pay for real estate that is due in more than 1 year. Non-current deferred taxes, basically taxes are due in the future but that just have not been paid yet. Non-current deferred liabilities, these are any debts or obligations that can be paid after a year. This could be pension benefits, these could be long-term property rentals as examples. Come down here to trade and other payables, non-current. Basically, these are obligations to pay for goods or services that have been acquired over the course of business, maybe from like a supplier or a vendor that works with Meta. The next line we're going to look at is stockholders' equity. Basically, stockholders' equity refers to the assets remaining in a business once all liabilities have been settled. Basically, this is the stockholders' claims on a company's assets after all of its creditors have been paid. Basically, the stockholders' equity is basically calculated by taking the total number of total assets, which is 185 billion, and then coming down here to the total liabilities, which is 60 billion, and that's where you get the total shareholders' equity of 125 billion here. Stock, basically this is ownership in the company that entitles you to vote for the board of directors and entitles you to dividend payments. Now, Meta unfortunately doesn't pay out any dividends, but if you were to invest in a company like Exxon, 3M, Johnson & Johnson, Pfizer, you'd be getting quarterly dividends during most years. I'm going to come down here to retained earnings. Basically, retained earnings, this is the amount of profit that's left over after Meta pays all its costs, taxes, and dividends to shareholders. Now what I'd like to do is go over some of these terms that are below the stockholders' equity. I think some of these terms are very useful to know about. So total capitalization, this is the total long-term debt and all types of equity of a company that basically constitutes its capital structure. Come down here to capital lease obligations. Basically, this is the total of the short-term and long-term capital lease obligations that Meta will pay in the short term for rent and utilities within a year, and then longer than a year. Come down to net tangible assets. Basically, this is the total amount of physical assets that Meta owns. So some examples would be the buildings, the land, the furniture, the computers, ping pong tables, jiu-jitsu mats, if Zuck has anything to say about it, inventory, and then you need to minus all the intangible, non-physical assets, such as copyrights, trademarks, and patents. You come down to working capital. So working capital is actually very important. Basically, this is the difference between the company's current assets and the current liabilities. Working capital basically helps Meta and other companies plan for future needs, and it basically ensures a Meta or a company has enough cash to meet its short-term debt and obligations, and to also pay its taxes for the year. Come down to invested capital. Basically, these are just funds that are invested in a business during its life by shareholders, bondholders, and other lenders of Meta. We can come down here to tangible book value. So basically for Meta, its tangible book value per share basically represents the amount of money that an investor would receive for each share if, God forbid, the company were to cease operations and liquidate all of its assets. Total debt, pretty self-explanatory. This is the total amount of debt when you add up the current debt as well as the long-term debt of Meta. Basically, this is everything that Meta owes. Share issued, pretty self-explanatory as well. This is the amount of shares the company has issued to shareholders. So as a recap, total assets means everything Meta owns. Total liabilities means everything Meta owes. Essentially, the main points are you want to see the long-term assets growing over time, year by year, and basically you also want to see a current ratio. If you're looking for a healthy balance sheet, you want to see a current ratio of at least 1 or greater. Ideally, you want to see a 2 or even a 3. I know with a company like Google, I believe their current ratio is around a 3. And that's how you identify a strong company with a healthy balance sheet. Well, if you found this video useful, feel free to give it a like, feel free to subscribe, and have a great day.